What if a year from now you were averaging $800 a day trading futures? Well, today I'm taking you inside my trading session to show you how you can do exactly that. I'll show you the results, but also the proven process and the discipline that creates them. So in this video, you'll see my daily routine that keeps me consistently profitable, how I automate parts of my trading day, and my exact prep for the next trading session. But first, I need some coffee. And then I'm going to show you a trade I've been involved in since 3:30 this morning. So let's get going. So let's take a look at what we got so far. I'm involved in an overnight bounce. You can see how it bounced off this yellow line. I had that order waiting overnight. It filled at what, 3 a.m.? Yeah, 3:30. And of course, there's not as much volume in the evening, but you can see how this thing bounced off and just shot right off that resistance kind of door. So that's what I was expecting. That's what I was hoping for, and that's what we got. So that is what we have going in the ES. That market opens at 9:30 in about 27 minutes. Order just filled. So that's a win. We love it. Before the market even opens. All right, so our order filled in the ES, which was awesome. Now we've got ourselves something happening here in oil. We've got ourselves a 60-minute level that I'm interested in exploiting for some resistance. I think this thing's going to go lower from there. It hasn't reached the point yet. But what we have done is cleared our previous day's high. As you can see, the pink line is the high from yesterday. My stop is going to be 30 ticks. Now, something that happens a lot is if price opens under the previous day's high, come up and we'll wash or flush or whatever you call it, and then come back down. Now, my bias is short. This didn't look super compelling to me to take a short unless it came up to this line up here, right? That's where I expect some major resistance. Now, we had earlier selling than I was hoping for here. If this thing doesn't come back up, then that's as high, as people were willing to let price go. Gold is going up. There was a potential trade here. I thought about this, but it just looks so dirty. It had just look what it's done overnight around the previous day's high, around the high. So had there not been all this noise below it already, this looks super standard, beautiful little kind of wash. And you could make an argument for it because look, we established more stops underneath here, right? So the wash is still something that could happen, but it just, I don't know, with all this stuff that had happened overnight, I didn't really have any interest in risking a stop on that one, but it worked beautifully. All right, as you can see in oil, if this thing comes down, I've been thinking about this. One of these plausible things, we've talked about it, is this can come down here to break this pivot and then come back down. That would be a responsible short. There are a couple things I don't like about it. One, the resistance to me is up here. That's where my entry is. And the other is that taking a wash or a flush for the sake of itself without any other kind of supporting context just doesn't feel great to me. Like the only thing I have is this pattern that happens sometimes, and that even doesn't look so great. So, while it's possible this could come down and backtest this line, I just don't have the context besides the chart pattern itself to go off of. And we've already got a win today. Mosquito, you son of a... So I don't want to force anything, we got a win in the ES. Happy about that. All right, so I found a way into gold that we hope continues up to the north. I found a little pivot here that I thought could be some resistance. So that's where I'm at. I'm long. You can see my targets up here. 60 ticks, 90 ticks, and we'll see where this goes. Here's what I like about this trade. We're in an extended trend to the upside. It's day 9 of our extended trend. That's good. What I potentially don't like about this trade is that I like these pivots. See, I'm getting long basically off this here. Yeah. I like that to be on the upside of this, just so it's not inside a swing. But because of the extended trend, I'm a bit more aggressive in my entry than I normally would be. If this thing gets within 90% of my first target, that's within 6 ticks, sounds like a Dr. Seuss book, then I'm going to, I'll be going to break even. Because I'm a little bit more aggressive than I normally would be, I might be careful with my stop. We've got ourselves a fairly important pivot here, where the real selling happened. So, see that? Sellers are still there. There's a lot of selling at that area. And of course, we got the buying at this line, which is what what we're banking on. that the buyers are stronger than the sellers. Something that I tell a lot of traders to do when you're inside trades like these is imagine what you're going to do if this fails. All right. Now there's context behind the trade. I've already told you what I like and don't like about it. There's some things about this that make me think that this may not go in the way I'm hoping it'll go, but I need to have my mind ready in the right spot for when that happens. So I'm not immediately hunting and revenge trading, So, I've got context. I've got my extended trend to the upside. I've got a pivot that I like. It's not perfect, and I'm slightly more aggressive in this entry than I normally would be. However, if this thing fails, I want my mind in the right spot. What am I going to do next? It certainly is not going to be hunt for another trade in any market. It's, follow our plan. Long is my plan in gold. So I'm long, right? Short is my plan in oil. So I'm trying to get short there. And short was my plan in the ES. I already did that. So let's see if we can, get through this pivot here. This is now the second attempt at it. There are obviously some stops built up, behind these pushes down. Once those things get taken out, price could theoretically continue the upside pretty quickly. So that's our goal. All right, when we see 54 on down here in this number, 54 ticks, we're going to move our stop to break even. All right, good enough for me. So we're at break even now. Means we don't have a loser, but we're hoping to get a win here. We are what? 1 tick away? 2 ticks? Come on, man. 3 ticks, you can do it. There we go. There's a winner. Love it. So now we just let this thing go. Let it go. Hopefully it hits our 90 ticks, second target. I'm not going to mess with it. I'll just let this thing ride. Really nice to have that foot hedge. New fill order. All right, we got ourselves a fill. Oh, yeah, look at you. So it is 10:03 and I'm already 2 wins in. I love that kind of morning. Oh, and here's right back at our line. This is always fun to see. And gold does this. Gold is super volatile. So I think what we're going to do here, TBH, it's another trade here, is wash that and come back up. That's what I think. One could prepare your hearts and minds for that kind of thing. ATR is still normal, going up to 11. This one goes to 11. I will not be trading this, but it is a plausible trade idea. Come out quickly, take out some stops, flush them out, and then move up. Creating liquidity, basically. This is why it pays to know what the big market, the big institutions do, the market movers, people with all the dollars. They're the ones moving the markets. All we want to do is move with them. That's it. Go along for the ride. Nothing wrong with that. This is not a battleground, right? Trading is not a battleground. This is essentially just feedback. The market is just always giving you feedback. No one's fighting anybody. All right. So we're not fighting the big money institutions. We're just riding along. Yeah. So here's our potential trade. If it clears this pivot, then I would be interested in getting long if I didn't already have a win. I generally try to do 1 trade per market per day, especially after 2 wins today. I'm going to take my profits and be happy with that. I'm not going to risk any more stops unnecessarily, especially in a market I've already gotten a win in. But we're going to monitor this because, if this had broken this pivot, and you can see why you don't get in until a certain time here, did not fulfill its obligations to tell me that we were ready to go higher. But if it does fulfill an obligation, a signal to tell us that it wants to go higher, then fine, potentially. This will either now continue to go way lower or go back up from here. Okay, perfect. Glad we were able to get long when we did. Okay, let's walk through the plan the rest of the day. Here is 1 entry I'm leaving. I'm going to leave this entry overnight, this order. If it doesn't fill today, I'm just going to let it ride. I expect to move down from this, a resistance thing. This is an oil from this 60-minute level here. All right, we've got an update here on our oil trade that I had waiting. The order has filled, and we are expecting a bounce off this 60-minute level right here. All right, so that's where we're at. Just filled, came up to test it, and now we're hoping that it just goes south from there. Okay, I've added a volume indicator here that I have on my other charts. All these bars down here, you can see the down bars have generally been bigger than the up bars. Okay, so the red bars are taller. So that supports that volume short has been a bit more than volume up. This bar up here, I was interested in watching that today because it's an outlier. Over the last month or so, we haven't really had an up bar that's been that big. So I think that supports the fact that we're going to continue down. Now, as we cross the halfway point on my target, we're at 34. My first target is 60 ticks down here. It's a good time to remind you and myself that when price gets to within 90% of my first target, I moved my stop to break even. Okay, so if it gets down there to 54 ticks down here, then I'm going to move my stop to break even no matter what. Now, things could influence me to do that earlier, but that's at least the baseline. Now, one thing you can do, you can set an alert here to tell you when it gets there, so you don't have to be standing here. See, cross below, good, got our cross below. And we can name it CL below. So when price goes below that line, I'll get an alert. Now you can add an app called Pushover, which will send this directly to your phone. There are a number of different indicators and apps you can use to give you these alerts directly to your phone. So what we do is move this line 6 ticks above my first target. That's 90%. Okay, so once price gets down there, I will get an alert, and then I can move my stop to break even. And until then, I can go hit some drums and prepare for my program next week in my orchestra and have some fun. All right, so I'll let this run. We'll see what happens. I have 2.5 wins now today, which is great. And for those keeping score, average $800 a day, I'm at 720 for the day. Not bad. Now, I don't measure my days in dollars, okay? I measure my days in ticks. So I have a lot of ticks, not the bug. Price ticks. So I'm real happy with that. I think this has been a morning of very solid trading and sound decision making. The advantage of having an automated trading system like this with my ATM strategy is that I can leave now, which I need to go get a haircut, and not have to worry about what's going to happen in the market. My stop automatically moved to break even once it hit my first target, and now everything is just set for either the target to be filled or not. And I'm just going to let the market do what the market does. It is wonderful to come back and see a full win. You can see I've marked out my targets here for you. Entry up here in the green line. These 2 white lines are both my targets. The second one filled after I left. So it's great to come back to that. So we have now 3 full wins in 3 different markets. 1 in oil, 1 in gold, and 1 in the ES. So that feels great. But even more important than that is the context behind the decision to enter these trades. If any of these trades had been losses, I could still walk away confidently knowing that I had context behind my choice to enter. Now, if one of them was a loss, I would obviously go back and review. Did I miss something? Was I reading something wrong? But in the immediate sense, context behind a trade gives me full confidence no matter what the result is. So we want to fall in love with this process of preparation and reading the market before we fall in love with the money that makes us, okay? This has been a great day as far as that's concerned. And we walk away with the average that we wanted today, just over $800. So feeling good about that. The process is good. And I'm going to show you exactly how that works so that we can be ready for the same thing tomorrow. All right, it's 5 o'clock. The market is closed and it's time to prepare for the next day's trading session. Now, I generally do this anywhere between the market close at 5 and before I go to bed. The most important thing, however, this happen every night consistently so that you're ready for the next day's action. The last thing I want to do is walk up to my charts at 9:30 trying to analyze what I think could be happening in the market today. So let's go through this step by step and you can see how this works. You can see on your screen we have the 3 major markets I trade: oil, gold, and the ES. The tick chart is where I place my trades, and then we have a 60-minute chart, a 1440-minute chart, which is a daily, and a weekly and a monthly. And then we go to our spreadsheet, and this is where I track information from each one of those time frame charts and helps me have an idea of what the potential movements might be in the market. So if we open up our spreadsheet, you'll see something called the primary trend. And for all of you technical analysis nerds out there, this is something Charles Dow came up with. And one of his core tenets was that the primary trend could not be manipulated, meaning the years-long trend. So I try to keep an eye on what that is for each market. Now, it can only go one of 3 ways: up, down, or sideways. In oil, you can see that my primary trend is sideways. I'm going to show you what that looks like. Big range since 2022, almost exactly 3 years we have been in this range. But it gives me an idea of what traders have been doing long-term with that market. So after the primary trend, we're going to work our way down from large time frame to small. And we end up on the tick chart, which is where we place our trades. I note the primary trend, and then I go through the monthly. What do I see on the monthly? I see a triangle. On the weekly, I see sideways with my bias short. I saw a little something called a bear flag. See how that kind of looks like a upside down flag? So my bias is short in oil, not heavy, but it's there. So after the weekly, I moved to the daily. I've written nothing much because I don't see much there. There's nothing but a flat bottom triangle that hasn't really respected the shape. So none of these charts are really saying much other than we're going sideways. That's all we know. I do have some buy zones and sell zones on my 60-minute level, and one of the beauties of a sideways trending market, I don't feel beholden to trading in one direction or the other. So that's really all we've got for oil right now. Sideways trending market with some places on the extremes of the 60-minute range that we're looking to get long or short at. That's it. And we were able to exploit that today for a short. Let's go through gold real quick. Primary trend in gold is long. And this monthly, look at this, it's been going up since 2016, just straight north. I see a triangle here that's written on my spreadsheet, and it broke out long. So now my question after seeing that is, do I also see that on a shorter time frame chart? I want confirmation that this has already happened on a shorter time frame before I give my monthly chart pattern much credence. So if you're a position trader and you say, oh, I've got a monthly triangle that just broke out, I'm going to get long, you might want to make sure that you look at your weekly to see, has it already happened there? And if it has, which it has, then you're probably good to go. And on the daily, we've already covered this so many times today, but as an extended trend to the upside, so my bias is heavy long. And on the 60-minute, these are basically all your support and resistance lines. So to see where action might happen. So here's how this looks on the spreadsheet. Primary trend is long in gold. We've got a triangle that broke out long on the monthly. Got a triangle that broke out long on the weekly. Good, they're speaking the same language. And even further confirmation on this long breakout is our extended trend and the daily. And then down here, I have my primary plan. So that's my preparation process. These are the things I look for in the market every night to give me an idea of what things might be doing the next day. Thanks for joining me for this. I've really loved taking you through my process, both my trading and preparation. I hope you've enjoyed it, and we'll see you again soon.